warm welcome to this very special broadcast on the India Revival Mission, which is a Times Network event where we are trying to look at how our economy is looking at this point in time. How do we analyze the last 6 to 8 months, which virtually have been a washout and have created concerns? And we also plan to look at the way forward on how we are going to get off to a start where we can then begin to start consolidating. And today on the show with me is Nikunj Dalmia. Nikunj Dalmia is the managing editor of ET Now. So all the business inside information is going to be coming from him. And I'm Navika Kumar. I'm the group editor of Times Network, and I of course look at the politics and the economy politics that goes with this. But today our esteemed guests joining us this afternoon are Sanjeev Sanyal, a principal economic advisor to the finance minister, the very strong voice coming in from North Block; Dinesh Kumar Khara, managing director of the State Bank of India, a man who has a much bigger role carved out for him; Mr. Vipin Anand, the MD of LIC, likely to join us in just a bit from now; Mallikarjun Rao, MD and CEO of Punjab National Bank, also joining us this afternoon; and of course my friend Amit Kapoor, Chairman, Institute for Competitiveness, who's put out this spectacular survey report which looks at this entire business extremely closely. As I introduce to you this esteemed panel this afternoon, let me first go across to Amit Kapoor, Chairman of the Institute for Competitiveness, to give us a sense of the findings of his survey, which put to rest all the earlier projections of a V-shaped recovery that we were dreaming about. Life has just decided to be that much more difficult, and is something that people have put aside a while ago. A U recovery or even shallow trough is something that people would be very happy to see at this point in time. So Amit Kapoor, how do you see the past 6 to 8 months, and what are we looking at over the next quarter as far as your survey projections are concerned?
Thanks for the question, and it's an exceedingly important question that we are really trying to grapple with or answer. If you really look at what has really happened in the world in the last 6 to 8 months, it has really sent shockwaves across the world. And what we have really seen is that contraction has been close to about 25 to 30% across the globe. So it is not that India is standing alone in this kind of a situation. But yes, of course, the question that arises is that how is it that we will revive back, or how will we revive back, and what is the kind of view that people have? And as to your question, whether we are actually going to be seeing a V-shaped recovery or a U-shaped recovery or whatever, but I think there are certain positives and certain things that we need to actually look at. One of the big positives is that this brings in a very important issue of how the alignment or realignment of global value chains is actually happening. So what we are already seeing is that they are actually saying that we are going to look at how the age-old orientation of value chains was actually happening, or supply chains was actually happening. There is also something more important that we are really looking at, is how businesses are innovating themselves. But having said that, if you really say that, what is it that there was this lockdown phase and the post-lockdown phase, but what we see within the lockdown phase was that there was a different orientation in my 6 to 12 months and things. But now I think post-lockdown, I think people have understood far better as to what is the impact of this. And now they're saying that recovery is going to take about 12 to 18 months. And then, of course, they are also really trying to reorient the strategy in terms of saying as to how they will.
Absolutely, Amit. We'll just sort out that audio link with you, but let me get in Mr. Mallikarjun Rao of the Punjab National Bank. Mr. Rao, my question to you is, we've had a stimulus package. virtually everybody's forgotten about it, because right now the economy is looking as if it never heard about a stimulus package ever in its life. How are we going to look at life from here on, given the fact that health experts are stating that this is going to take a while before the pandemic blues are sorted out? We are looking at possibly a 12 to 18-month window where the pandemic war is going to go on in the background. Many countries in Europe and other parts are looking at a second wave and a second lockdown options. India somehow doesn't even seem to be thinking about it, because the economic cost that we've paid for the first lockdown itself seems to be a situation that's pulled us down so far that any chance of a recovery will, completely go out of the window if we think about a second lockdown. Given this scenario, how do you think we are looking at a short-term revival? Because this is the mission for revival, and we're looking at some very creative but real ways of getting out of this position.
Correct. See, if you look at when the lockdown was imposed for the first time, there was an expectation of the things to improve in a defined period of time. Globally, everybody was expecting that probably after 4 to 5 months' time, things may become normal. And it is too long a time that we had a lockdown almost for 5 to 6 months, where it would be very difficult for a country of our size to keep the economy in such a subdued status that the pandemic's impact and its impact on psychology of the entire population is going to play in such a way that economy cannot come back. So the important factor is everybody currently in the country would like to come back to normalcy in economy sooner than later. Now, in spite of the fact that the cases are still increasing and globally everybody is warning that there could be a second bout of an impact, it is not playing very heavily on the minds of the people globally as well, and in our country specifically, because it's too long a period that they were in lockdown and they are longing to come back. Now, your first point to say that the economic stimulus package, what has been announced by Government of India, is forgotten in terms of discussion in the public domain is not correct. The reason is the economic stimulus package has been started initially with giving a DBT transfer so as to create at least consumption capability in the hands of the people in our country. Now, by far, if you have seen various measures taken by the government, implemented by the banks, have reached out to the public, more importantly those who are in the MSME segment and other areas. But the question is, the economy is yet to come back. Now only we are seeing some green shoots whereupon some of the sectors are longing to come back. Now, it is a simultaneous coexistence of the cases moving forward, but at the same time, we cannot ignore the spirit of the people in the business entrepreneurship for longing to come back in the economy. All of us in the ecosystem need to nurture the situation and see that the stimulus package reaches out to them, and the players in the ecosystem work towards bringing the economy back. Whether the sector specific coming back depends upon 6 months to 12 months domain or even 18 months domain, it all works around when do we start. Time has come where from probably the trigger of festive season should be the starting point for the revival of economy.
Mr. Khara, things were bad. Have things become from bad to good, or things incrementally have only improved? Because if I look at high frequency data, which is electricity consumption, bank credit, what is happening to credit demand, all of them are indicating to a strong revival in rural economy or the agrarian economy, which is only 15% of the GDP, but 85% of the GDP is nowhere close to normal. So what kind of scenario are we staring at? It's not depressed, but there is of course no revival or nothing which could be called as great or fantastic also. Mr. Khara, Nikunj from the studio. My question to you, Mr. Khara, is that what is your read of the economy? Has horrible become good or horrible has become bad? Because if I look at high frequency data, Mr. Khara, which is bank credit, electricity consumption, fuel demand, none of them are pointing to a revival, even though economic activity has picked up. Corporates are not borrowing, banks are not lending. Where are we headed, sir?
Well, Nikunj, I think what you read in terms of the numbers, perhaps what you are saying is absolutely correct. But nevertheless, what I would like to mention is that there are certain sectors in the economy where we do get to see some kind of a positive traction. You said that from bad to, whether things have moved to bad or it has improved. I would say that, the way things have emerged in terms of the health and hygiene issues, and naturally it led to a situation where there was some kind of a fear psychosis in the mind of everybody. And it also was a situation where people started conserving cash, whatever they had. So, but what we are observing is that some of the sectors, particularly when it comes to FMCG, when it comes to steel sector, those who have got some kind of a demand-led growth opportunities, there we are seeing a very good traction. Likewise, even in the auto sector also, the small cars, that is something which is on the upside as far as demand is concerned. So I think what is really happening is that, as Mr. Rao rightly mentioned, that now people are willing to come out and really contribute to the economic activity, but at the same time, they have got some fear psychosis in terms of health and hygiene. So I think it's a situation which is improving on the go. It is not that something where, as and when there is some kind of a certainty in terms of the availability of vaccine or maybe some kind of a certainty of the revival of economic activity. In certain pockets, we are seeing that there is definitely an opportunity for growth, and we are also dispensing credit. So when we look at credit in general, well, of course, the growth is somewhere around 7%. But if we start, slicing it further, we get to see that when it comes to consumer credit, it is actually on the growth cycle. So when it comes to personal loans, when it comes to car loans and auto loans, it is all on the upside. But yes, of course, when it comes to corporate credit, there is a tendency to deleverage first of all, because they are into a bit of an uncertainty. They are not into the investment cycle as of now. But I think we do get to see some kind of attraction when it comes to certain sectors like road sector, where we have seen a definite improvement in the complexion. So I think the economy is in the different part, the behavior is a bit different. But nevertheless, one thing is very clear: people are only looking for the right signals or some bit of a positivity, and once it is seen, they're all out for supporting the economic activity. So that's how I read the situation.
Okay. Right. Let me also get in a word from Mr. Vipin Anand of LIC. What is your understanding about the economy, Mr. Anand? Because you are in a position to perhaps judge what is happening to the insurance sector. You have a field of agents who cover the length and the breadth of the country. What are the feelers you are getting from them in terms of where the economy is headed? I'll get into specifics of life insurance and what's happening there. But first, what's your feel of the economy? Because there is a clear revival in the digital business. There is a clear revival in the rural business. But there are deep pockets of stress which are there, at least in the corporate sector, in the consumption sector. And needless to say, everybody knows the kind of fragile state hospitality, travel and tourism and airlines are in.
Good afternoon, Nikunj. As far as the insurance industry is concerned, I think we are definitely seeing a V-shaped recovery. As on date, I am very happy to tell you that we are positive on new premium, we are positive on renewal premium. We have made even more maturity and survival benefit claim payments than last year, more than 80 lakh of them so far. And investments are great. in the current financial year so far, we have invested more than 2 lakh crore altogether. So I think as far as the contribution of the insurance sector to the revival story is concerned, we are well on the way. Regarding the general situation, what you were talking about earlier also, what I would like to comment is that money, I think, is not really the issue. I've said this earlier also. What possibly is required more is a little more confidence in everybody for facing the situation. And right now, the biggest issue we have is still the health issue. The number of corona cases are substantial every day. And we have moved on to the third position, maybe probably moving on to the second position in some time. So that is something which doesn't give people the confidence to really start spending money. When you're looking at the manufacturing sector and the industrial sector growth, it essentially comes from an uptake in the spending by the general public. And that is something which is not happening. So there are certain features which we need to look at. One thing is the public needs to have confidence that if they spend the money, they are going to be able to earn it back and keep the cycle going. Similarly, when if for the industry to put in money for taking loans from banks or any other institution, again, the issue is that if they put the money in new projects or if they put the money in working capital through sale, then they are not going to be saddled with inventory and more loans. Banks have already had a PCA problem. They also will naturally tend to be cautious about choosing the people to whom they are willing to give money. Still, a lot of banks are still under PCA, and even though they have the money, they are not in a position to lend. So I think all these things need to be addressed. One thing which we need to be very clear about is that we are still in the first phase of corona. So it's not going to go away any day very soon. What we need to have is a concerted strategy of fighting a long battle. And to that, I think any future lockdowns or anything is not an option at all now, looking at the state of the economy. What we need to do is create the discipline in people, the health and hygiene discipline, which seems to be a bit short after what has happened in the opening of the lockdown. That needs to come back very strongly, and I think the government will need to be very tough on enforcing this kind of a discipline if we are to build that kind of confidence in everybody that we can work in these circumstances and come out on top.
Mr. Khara, you spoke about a few green shoots. You spoke about a few sectors where loans were picking up and consumption activity was picking up. I want to ask you the more basic question. When we first talked about the lockdown, we felt that people being laid off or migrants going back, to their villages or their towns was a temporary phenomenon which would be reversed in a manner, as we addressed the COVID pandemic situation. But what we are now looking at is long-term displacements. The work from home, the layoffs have resulted on a huge amount of workforce getting unemployed. There have been salary cuts, there have been layoffs, and more than anything else, companies have learned now to scale down their operations and get on and get their work done from a fewer number of people, which is a learning that they've got through this lockdown. Are we ever going to see a reversal of that trend? Because consumption will depend on how much of our workforce comes back, how salaries get corrected over a medium to short term, and of course the fact that many businesses have completely gone out of the map simply because they just could not survive the blues of the lockdown. So before I get Mr. Sanjeev Sanyal to give the government perspective on this, I want to know how, as a banker, you see this given the kind of shake-up, the unemployment figures that we are currently looking at.
Well, Navika, I think your concerns relating to unemployment and the new paradigm shift which has happened in terms of the way various corporates are working I think, to my mind, it is a bit of a transition. And we have seen in the past also that at various stages in the economy, we have witnessed such kind of a transitory phase when we have seen that the businesses realign themselves to the new realities. So I think in the current scenario also, it has so happened that when the pandemic got kicked in, so that's a point of time when people had not visualized that how will they be in a position to carry out the BCPs. So actually they had to really reinvent the BCPs almost on a go. So that is the kind of a scenario which we have, all of us have witnessed. And now, in about 6 months from then, it has come to a situation where the new realities are staring, in terms of working from home, etc., leading to a situation where there could be challenges in the lease rentals. So what we observe is that it's also a stage where some bit of a consolidation is happening. When it comes to the lease rentals, for instance, for the offices, what we have also witnessed is that the high quality buildings are not facing any challenge. Whereas the one which are not as good quality, they are of course facing some challenges. So I think what is happening is that new cost norms are emerging, and also the fact that the social distancing will require even more space in the office, that is also a reality. So these are only examples which I'm trying to, with which I'm only trying to support my argument. So I think what's going to happen is that maybe, we never thought of that small car will become so much in demand. It will come so much in demand. So when there's a challenge for, the public utilities and also maintaining safe distance, there's so much of small car demand is there on the anvil. So I think these are the new realities which are getting unfolded. And so long as it's a transitionary phase, maybe we'll witness a bit more upheavals. But once we have a certainty in terms of how the economy is going to look like and how the businesses will operate, we'll have more certainties, and there would be more responses to those realities, and which will really help the economy to recover from its current shock.
Well, so let me get in Sanjeev Sanyal in. Sanjeev, we have talked about the pandemic and its impact as a transient. But do you really think it's going to be transient? Because the survey that we are talking about, Amit Kapoor's survey on competitiveness, which says that this is a phase that's definitely lasting 12 to 18 months. The finance ministry was looking at some sort of a V-shaped recovery. Do you still hold on to that belief, or do you think we are past the worst, or do you think we are still swimming in the sea of uncertainty, given the fact that we are seeing across the world a second wave coming in and talks of a second lockdown in many countries?
Well, I think if you will remember, I was saying right from the beginning that this is a marathon and not a sprint. Nevertheless, I would argue that we are now well past the worst of the impact of the COVID pandemic, in the sense that obviously we are now opening things up. We are no longer in lockdown. So there are many parts of the economy that have indeed come back. Now, this doesn't mean we are back in normal. That will happen asymptomatically over time. But the fact of the matter is that we will need to go back to a situation where key parts of the economy like tourism and hospitality and travel have been completely opened up. So accepting those sectors, I think significant parts of the economy will be up and running by the end of this year.
Mr. Arjun, while we all are optimists, both Navika and me always have the glass half full approach. But my question to you is that why do you think it will not get pitch dark before it gets better? Look at the four sectors, Mr. Mallikarjun, of the economy. Exports, complete disarray. Government spending, well, our fiscal health is not great that we can continue to spend because the government has constraints. The third pillar is corporate sector, which is not spending. In fact, companies like Reliance are deleveraging. And then you got consumption, which has slowed down. So my question is that for India to come back on track, and even if we are talking about numbers of 6%, I'm not going to 7 or 8 also, who will do the heavy lifting? Who is going to be taking the risk? Who will be leading the growth engine again?
Right, the first question is who will lift the engine is definitely every person in the ecosystem. That means the state at the central and different states, the entire financial institution segment, more importantly the banks in the ecosystem, all will have to work hard towards that. I would not agree that the consumption has been affected very badly. The consumption is affected because the cash is not available in the hand. If the availability of cash comes with large amount of population in our country, I don't think there is any issue with the consumption. The only question is how to create the demand and how to take the issues forward. You have spoken about exports being impacted. I do agree, because of the lockdown, exports got impacted. Now, this impact will be good to understand that the complete renewal of the activity in terms of the exports. Since independence, if you have seen, while the exports and imports combination over a period of time increased, there has never been a situation where trade deficit has gone down. So while the exports also have increased, imports have also increased over a period of time. Knowingly or unknowingly, in the last 15 years, we have depended on more imports in terms of the essential goods into our country. As a result, during that time, our small scale industry segment got impacted. Now, in the last 4 or 5 years are a little over, and more importantly, because of the pandemic, we realize that there is a requirement of domestic industry to be augmented. Whether you call it as an import substitution by way of properly supporting specific segments, or even overall creating an impact on increasing the manufacturing sector. The real panacea, if you are looking at in the economy for seeing the GDP growth, should be the manufacturing sector. In terms of manufacturing sector, since we have seen a reduction in the last 10 to 15 years by way of dependence on imports, we'll have to work very hard in the ecosystem. One is to see that the backward linkages are proper by creating manufacturing hubs, and also see that the the corridors in terms of sales, in terms of marketing corridors, whether you are looking at domestic sales or even exports, to see whether the cost of sales are protected for the domestic industry as an important factor. So here, while these are all the major issues to be addressed by the entire ecosystem, we'll have to go through segment by segment. We'll have to define or identify the segments by looking at if there was a dependence on import, how we can remove the import, and how we can create the domestic manufacturing industry to substitute those imports to move forward. Currently, kindly remember, the entire global economy is impacted. As such, all other countries also are raring to come back into their economy. The competition in terms of exports for our country will be much more pronounced rather than what was there earlier. So we'll have to be very conscious of looking at the cost of production when we are looking at import substitution to be taken care of. So the question here is, while it is true that the pandemic has impacted very badly, but we all in the ecosystem will have to work very hard to revive. There is no single segment which can take care of handling the burden, but in the entire ecosystem, everybody has to come with a concerted effort to move forward. Already certain initiatives have been taken by Government of India, whether you call it as an economic package or bringing certain reforms as way back in October for tax reforms. Though we have not seen much of an investment, where various reasons could be attributed to that, whether you call it as a leveraging or otherwise, but the way forward should be with positive impact to be created by all players in the ecosystem.
Mr. Anand, let me encourage you to come in and talk about how realistic do you think this time the Atmanirbhar attempt of the government is going to be. Look, there is a clear policy framework and an attempt by the government to reboot the manufacturing sector, but it's not been done for the first time. Low interest rates, government policies, they are necessary conditions, they are not sufficient conditions. There are some pockets where you are not competitive because others are better, whether it's China or parts of Vietnam or Bangladesh. What is your sense, Mr. Anand, on Atmanirbhar Bharat and how effective this is going to be? And what do you think? This will end up becoming more like a Made in India slogan, or this time we will genuinely see rate of change on the ground?
Because you have hit the nail on the head when you say that low interest rates and availability of finance are necessary conditions, but they are not the only conditions which need to be satisfied. I think, I would just like to add something to what Mr. Mallikarjun Rao was saying. When we are talking about exports, I think he made a very important comment that when we make more exports, there are more imports also, and ultimately the balance of trade doesn't improve in any factor. Under the current circumstances, what every country is today doing is focusing on the market inside the country. And I think India in that regard is uniquely placed. We have a huge domestic market. So I think we don't really need to look at exports in that manner unless where we have an edge like in technology. Having said that, coming back to your original question, I feel that one thing we need to realize is that if we feel that we will go back to the normal, we are deluding ourselves. There is a new normal and we have to understand the new reality and start working along with that. There are jobs which have totally vanished. They are not going to come back. And there are new jobs which have come up during this pandemic, which will create huge possibilities for employment. We need to understand this situation. We need to identify the situation, the jobs which are now coming up, reskill the people and move forward. Again, if we want to reboot the economy, the first thing which has to be there is that the fear of Corona has to go away. Corona will not go away, but the fear has to go away. So we have to have an absolute discipline regarding using of masks, social distancing, sanitizing, and ensuring that the people who are necessary in the workplace are actually there. Coming back to Atmanirbhar, like I said earlier, we have a huge domestic market which offers us a huge opportunity. But like I said earlier, the issue is confidence. A person who has the money in his pocket is not willing to release it. Whether it is the customer, whether it is the companies, I think what we need to do immediately is that we have to come up with huge amount of infrastructure creation and development, because that is what has come out very clearly during this period, that we are woefully inadequate with all kind of infrastructure. Looking at all the 4 segments which are there, health infrastructure, I think I don't need to elaborate on this. As far as physical infrastructure is concerned, whether it is road, whether it is railways, whether it is anything, I think there is a huge scope, especially looking at what China has done in the last few decades. Unless we'll build a huge amount of infrastructure, the economy will not move forward. And infrastructure development capex is what drives the entire industry and the consumption.
Mr. Anand, we need to take a break right now. Let's take a quick break. When we come back, we'll talk to Sanjeev Sanyal on more specific things the government is thinking. Is there is talk of a stimulus package? Is the government planning to consider a stimulus package? Oil prices have come down. So what are the plans to really pass on the benefit to the consumers? And then with festival season round the corner, what we should expect in terms of demand and on-ground revival?
Welcome back, ladies and gentlemen. We are talking to the bigwigs of the banking sector. We are also looking at Sanjeev Sanyal, Principal Economic Advisor of the finance minister, and getting us the North Block point of view. And we also have with us Amit Kapoor, the author of the Business Competitive Survey, and of course Nikunj and myself. We are the hosts of this India Revival Mission entire blueprint that we are looking at. First, let me get across to Mr. Dinesh Khara. And Mr. Dinesh Khara, I want to ask you the question of the gross NPAs. The fact that there have been businesses that have gone out and down the tube over the last 8 months is a reality we'll have to face up with. We were looking at NPAs in the region of about 8.5% in March 2020, but this is expected to go up by about 4% to about 12.5% in 2021 March. And if we continue to see the slide in the GDP numbers as they are evident today, then this number could hit around the 15% mark. In the context of these NPAs growing, the basic issue of revival will depend upon the health of the banks. How do you look at this huge challenge that is confronting banks and of course the government, which has to look at recapitalization of banks at a time when it's facing a funds crunch and virtual overdrafts on GST to states? I think we have an audio problem with Mr. Dinesh Khara. Let me go across to Mr. Mallikarjun Rao. Why don't you take that question, Mr. Rao, because Punjab National Bank, SBI are in the same league, and this is going to be a huge challenge for banks.
Correct. I do agree with you that the gross NPAs, if you have assessed at least 3 to 4 years back, has been a huge challenge on the banking space, more importantly the public sector space. As a result, we have seen many of the banks moving into a prompt corrective action imposed by Reserve Bank of India. However, in the last 2 years, there has been marked improvement in the performance of public sector banks, whereupon many banks have come out of PCA, and there has been an improvement in the gross NPA ratio as well as, more importantly, the net NPA ratio, because the provision coverage ratio over these 4 years has improved very well. The question is now, when we look at the impact of pandemic and the way the financial stability report also published by RBI indicated about the worst case scenario possibility of an increase in gross NPA by anything around 4 to 6% is definitely going to impact. However, if you have seen the moment of economy, while this report was published in the month of July, by assessing overall over a period of 1 year and also the impact of pandemic for over 6 months, we are looking at the economy eager to come back. Now RBI has also come out with the restructuring norms by looking at the possibility of restructuring the advances, retaining them in standard category, so that you are able to give a helping hand for the industry to come back normally by looking at the cash flow for the future. If you look at all these measures, they are all good measures taken to stabilize the impact of pandemic financially on various sectors. On the other way, the sectors which are having cash surplus, otherwise doing well, have also deleveraged so that their debt burden also will be reduced over a period of time. So these measures taken by the industry, taken by a regulator, and also the banks moving forward are in right direction. Even then, I would like to assess, or rather of the view, that the gross NPA impact will not be very high at the end of March 2021 or March 22, as we are thinking of maybe impact of 4 to 6%. This could be because of one, economy coming back; second, the restructuring window being opened; third, the industry moving towards deleveraging to reduce the debt burden. And another important factor is when the economy starts moving, starts coming back, the bankers also will be looking at to augment the capital so as to protect them, so as to ready themselves for lending, getting readiness for lending. Now, looking at the capital requirement, if you look at the current market position, there is a lot of funds available for investment, but it is only a matter of public sector banks showing their face to be preferred for investment. All of the banks, after particularly amalgamation, have become big and have shown good amount of interest for the people to invest into the banks. We'll have to wait and see how next 6 months are going to define in terms of capital augmentation from the market for these banks. I am very positive and confident that the bigger banks will be able to garner money by going to the market either through bonds or through equity, and a realistic assessment considering the impact of restructuring, also considering the ability of the banks to go to the market, will be known somewhere in the Q4 of the current financial year. While the realistic estimate of impact, how the economy is going to create on the banks in terms of provisioning for NPAs and in terms of the capability for lending are very important for us to assess, but I am not very negative in thinking that this pandemic will create very high impact on the banks. Banks have inherent capability. Whatever has happened 4 years back in terms of asset quality review, they have come long way since now. There has been good amount of improvement in the banks. Now only there are 2 or 3 or 4 public sector banks which are remaining in PCA but smaller in size. Because of amalgamation, bigger banks have come into the financial segment. All will be working very hard to augment themselves to cater to the requirement of lending. We only avoid demand to be created not only by the government but also by the industry segment.
Mr. Vipin Anand, one is the challenge of the gross NPAs. The other issue is that 27% of public consumption is down. We are also looking about a 50% shaving of investments. Now, these two alone used to add 88% to India's GDP. Given the fact that however much we may say that it's going to go towards recovery, investments are not going to come back overnight, neither is private consumption going to. In this scenario, what do you think the end result in March 21 is going to look like as far as the GDP numbers are concerned? Are we going to stick to the current projection of 7% being shaved off? Or are you looking at a more, negative, pessimistic performance? Mr. Khara, would you like to take that question?
Well, I think when it comes to the likely scenario towards end of this financial year, I would say that, things when they improve, they will improve at a very fast pace. As compared to it is not likely to be the normal secular trend which has been witnessed in the past. So I think, to my mind, as the situation looks like and what we have seen in the recent past, as soon as the unlock period started, we could get to see a positive traction in some of these months, in the last few months from July onwards. So I think if at all the unlock continues like this and we are in a position to address the health and hygiene issues more effectively in terms of living with the pandemic. So I think there is a possibility that we may get to see even better performance as compared to what is being seen as of now. Because to my mind, the most important component here is the confidence of the consumers. And the confidence of the consumer is a function of how people are in a position to navigate this particular problem relating to corona. So I think if at all we can live with this situation and we can lead a, if not normal, at least near normal life, things will actually look up. And apart from that, the kind of money which is being spent by the government through various infrastructure projects. For instance, about 3,000 kilometers of road has got constructed from April to June in the first quarter itself. So that's a very clear reflection that the government apparatus, when it comes to spending for the development projects, that is something which is really supporting the economy at this point of time. And I think that is the way forward. And with that, the demand will come in. And with that, when we will get to see the demand, there will be some kind of a private investments also which will come in. So RBI is keeping the liquidity in a fairly easy position. So that is something which is ensuring that there's all these instruments which are there, they should remain liquid and there should not be any setback to the economy. So I think with all these efforts which are being put in, I hope that we'll get to see even much better March 21 as compared to what it is seen as of now.
Okay. Right. Well, I'll urge everyone to stay with us. We'll take a very quick break, but specifics on this fear of second lockdown which has now emerged both locally and globally. How could this really derail forward assumptions? Because we are right now working with an assumption that things will get from worse to better and better will become good. If the fear of a second lockdown comes globally, how will that impact India? And is India prepared for a second lockdown? More specifics on that with Sanjeev Sanyal right after this break. Hello and welcome back to our special broadcast on the Times Network, India Revival Mission, where we are debating, discussing and also ideating that what needs to be done to put India back on the growth track. At a time when there are low interest rates, a reboot button has been pressed, there's definitely going to be a shift towards countries which offer capital safety, better growth and are able to also give a better visibility in terms of demand as well as consumption. So what can India do to get lion's share of global flows, and how realistically are we likely to come back to our pre-COVID levels? We are in conversation with our experts, and Navika and me are the host of the show. But Sanjeev Sanyal, I'm going to ask you something which is perhaps related to what the need of the hour is. And the need of the hour is to understand that how serious in your assessment and government's assessment the chances of a lockdown because of second wave of coronavirus is. If it is there, is India prepared for it? And if it is not there, why do you think we can ignore it?
Well, I think, as I mentioned, there are certain parts of the economy that are now reasonably functioning. I think you can see that with railway movement of cargo. You can see that with electricity usage and so on. So there are parts of the economy that have more or less normalized. I wouldn't say they're booming yet, but they have normalized. But there, as I mentioned earlier, there are certain sectors like travel, tourism, and so on that will have continued to be impacted. But again, even here, we are systematically, step by step, opening things up. And of course, then there is the big thing about international travel, which will take some more time because that requires the rest of the world also to be in position for it. And as you know, there have been major cases of second wave revivals of COVID in places like Europe.
Sanjeev, the survey findings are clearly unanimous when it comes to reducing dependence from China, which is that all companies which were part of the survey with Amit and his team did, there seems to be a consensus that India's dependence on China has to reduce and Atmanirbharta has to increase. So how much of imports do you think India can realistically substitute in the next 2 to 3 years?
I think, first of all, we need to be clear that Atmanirbhar Bharat is not a return to import substitution. We do intend to provide protection in certain parts of the economy where we do want to create the clusters. But Atmanirbhar Bharat is ultimately about participating in the rest of the world. And we will provide support to certain parts of the economy where there's national interest, for example, in the case of RCEP, where we didn't participate because we had certain concerns, where we will take certain kind of line in order to protect national interest. But however, remember that we continue to be committed to be participating in global supply chains. And in fact, if anything, we want these supply chains to move to India. So therefore, do not think of this as some sort of an import substitution approach. This is much more an approach towards creating capacities in India for global markets.
Well, let me get in Amit Kapoor in at this point. We had some network issues with him, but Amit Kapoor, I want to ask you, cancelled projects, people being laid off, employment being a real challenge at this point in time, a second lockdown staring us in the face. Do you think Israel, UK are talking about a second lockdown with all the problems that we have on our hands on the economic front? Is it something that India can even look at amongst the other challenges that it's facing currently?
So, Navika, if you really ask the question if India is actually going to be looking at a second lockdown, I think the government has learned quite a bit from the previous phase of lockdown, and I think they would follow an approach which is going to be more like a European approach. I don't think it is going to be India which is going to go under a lockdown by any stretch of imagination. It might be that we might see some pockets of huge, outbreaks. That is where the lockdown can actually happen. So if there is a lockdown happening in a certain state, if a certain state is seeing a huge upsurge in infection, that might go through a lockdown. But I think looking at the conditions right now, because there are close to about 200 districts which are taking the deeper, the chunk of the infections. So a pan-country lockdown is not going to happen. So I'm very, very clear on that. And I think government has also learned from the previous experience. In terms of what is going to happen across the world, that's a choice. Like Israel is a very small country, so they can actually look at a certain way of really looking at lockdowns and things. India will follow an European approach. In terms of, say, what Sanjeev was saying from an Atmanirbhar Bharat point of view, an economic point of view, and effect on lockdown, I think the question is the enterprises are now also looking at that the lockdown is not going to happen. They are getting prepped up to a situation that lockdown is not happening. They know that there are going to be targeted lockdowns, and they're continuing to build up their strategies accordingly. There are going to be a huge impact on strategies that enterprises are following and as to how they really rev up. But I think we are looking at a phase wherein we are going to look at a fairly positive economic situation in the coming 12 to 18 months, maybe 24 months. But this is something which nobody could have avoided. So that is where things are going to be.
Well, we also have Sanjeev Sanyal. And Sanjeev, I want to ask you this question. Leading corporates have suggested need for more government spending to support the economy. The festive season is around the corner. Do you think there is any scope for a fresh stimulus and coincide that with the festive season to encourage spending as well as look at consolidating some of the businesses which may need help through the stimulus?
As I have said many times on your channel, so far the last 6 months were very much about creating a cushion from the shock of the lockdown. So we were at every stage not trying to restart the economy in the sense that clearly there's no point in pressing the accelerator when you've got your foot firmly on the brake. So far, therefore, if you look at our steps, they're basically to make sure there is a safety net for the poorest section of our society and for MSMEs and others who were vulnerable to this particular shock. Here on, however, as we open the economy up, we have pulled our foot off the brake, and now we are in a position to press on the accelerator. So this is a switch to a different strategy from here on as far as reviving demand is concerned. We recognize that demand needs to be revived and that both monetary and fiscal measures will be used for that. There is space on the monetary side, I keep emphasizing that, but even on the fiscal side, we do have some space. And we have a very specific approach to using that fiscal space. I think the Prime Minister alluded to this in his speech on Independence Day. This is about really ramping up infrastructure spending. We will spend what we have budgeted, but where possible, if there are spade-ready projects, we will ramp up the spending in order to get demand up and running. So our approach to this is very, very specific.
Mr. Khara, let's talk about what is happening to the big trend. And the big trend is that big companies are becoming mega companies and medium companies are becoming smaller, and MSME and SMEs are finding it difficult to survive, and some of them may not revive ever. We are looking at an economy which is getting divided and concentration is only increasing. It could be efficiency, it could be something else. But the bottom line here is that this pandemic surely has created the divide. And this divide is going to hit us not today, but it will hit us indirectly very badly, because it will have impact on demand, credit, and also employment.
Well, I think as far as my reading goes in the current situation, perhaps, there is going to be a consolidation. It's going to be a consolidation phase, and consolidation not only in terms of size, but more in terms of quality. And I think that is something, irrespective of the size, if at all a unit is efficient, a unit is competitive, it will probably become bigger and stronger. And I think there will be sufficient support coming forward also. But having said that, there is also it's also a reality that we do recognize the entrepreneurship, and that is one of the reasons why the SME funding, which has been envisaged through the GCL kind of a concept, wherein the government is giving the guarantee to the financiers, and also it is ensuring that there is not adequate. There's no unduly strain on the capital of the banks, and also at the same time it supports the entrepreneurship on ground. So that is something which is likely to be the future, and it will lead to the creation of SMEs also, and supporting the SMEs at this point of time when they really need the support. Because all said and done, SMEs are also one of the major sector which is offering employment to lot many people. So I think that is something which is going to be the reality going forward. But as the ecosystem is encouraging the competitiveness, and also I think it will lead to a situation where all these SMEs also will get oriented towards the competitive spirit, and eventually that will lead to a very healthy entrepreneurship in the economy. So that's what my read is.
Mr. Anand, I'll get in the most important element which so far we've not discussed, and that is the whole digitization, what is happening to the economy. Whether it is investments coming in Reliance, or for that matter how IT companies have evolved. What's the update on LIC? Because LIC in a sense has worked through agents. Those agents would be the frontline faces for LIC and for insurance sector, who would go door to door and sell insurance. How has the digital adoption changed your life, and where do you see that changing for your sector?
Nikunj, digitization is an essential part of the working of an insurance company, because with the kind of volumes of data we handle, there is no other way. It is just a way of life with us. And on one hand, the lockdown has made it necessary to move forward at a much faster pace. And on the other hand, it has also provided opportunities to have a relook at what all we were doing and rethink our strategies for the future. What we are looking at is not only bouncing back. What we are planning is to bounce forward, of using this as a stepping stone for a bigger opportunity. And during this period, what we have done is that almost all processes we have totally computerized. We are virtually on the verge of making everything do it yourself for the end consumer altogether. Very soon, I think you will see LIC policyholders being able to do everything from their mobile itself. I think that has been a big development in this area. Next, we are planning to move on to new technologies and automation. And already we have introduced a chatbot in the current year, which is Jeevan Mitra. From January to September, about 75 lakh queries we have received on that. And it is now operating at an efficiency of about 97% effective dealing with the queries of the customers. I think the AI and the machine learning, which is incorporated in the chatbot, is helping the customers a lot in making it simpler for them. We have also recently introduced a Hindi version of this to address the larger population, and that is also moving forward. I hope that by the beginning of the new year, we would be entering the area of automation also to some extent, and take this entire journey forward.
Well, gentlemen, we need to discuss a lot about the political economy, which we'll do after this very short break, because we need to look at the farm bills, whether it will really give a boost to the agriculture sector. We'll need to look at the GST unpaid bills to states, how that's going to impact the states at the level of trying to help businesses. All of that coming right after this very short break. Don't go anywhere just yet. Welcome back, and let's now look at some of the politico-economic fallout of the lockdown, the slowdown or the negative GDP numbers that we've been seeing. And Mr. Mallikarjun Rao, I want to ask you, there have been statements that have been made by opposition parties. The one big thing, of course, that opposition parties are extremely united on is the fact that the government has still not been able to clear the GST dues of states. How far is the criticism of the opposition, whether it is former Finance Minister Mr. P. Chidambaram, who's virtually called this a reneging of the promise and the mishandling of the economy as the single biggest reason why we are facing the current problems and challenges in the economy? Mr. Dinesh Khara, if you could take that question.
Well, I think the government is fully engaged with all the state governments, and also there's a concerted effort on the part of the government to figure out a solution which is in the ultimate interest of all the state governments. So I think I would say that various kind of options are being explored, and some are workable too. So I think that way there's a very clear effort on the part of the government to ensure that there's amicable resolution of the problem in hand.
Mallikarjun Rao, I wanted to ask you the question about the farm bills and the dismantling of the APMC regime, because rural growth, a boom in the rural sector is something that really could help boost up our GDP numbers and start the revival from rural areas. Do you think the agriculture sector is likely to see the benefits of the new regime through this new law in the short to medium term?
Definitely. Before we conclude on the impact of farm bills, let us understand for a long time, even in independent India, while there has been a conscious effort by successive governments for improving the economic status of farmers, we have not seen much of an impact, because every time, since they were dependent on rain-fed agriculture predominantly, they were all the final outcome of getting money was completely dependent on two factors. One is, if the crop was extremely good, the price protection for them by way of an MSP or the kind of money what they get while selling the crop. Second, if the crop has failed, the protection what they require for again regrowing. So these are all the elements which you've been seeing over so many decades, that when the crop is even good, they were not able to get a good amount of income. While sporadically few farmers would have upgraded their economic status in the last so many years, but it has been predominantly the same status. So if you consider those factors, while at the perception level, initially when the government has come out with this APMC, these farmers bills, there are divergent views in the public domain in terms of debate. I don't think there is any reason to believe that this will be detrimental to the farmers, because when it is a starting point of change over what we have been seeing in the last so many decades, it is very hard for somebody to believe that this is going to bring in more impact on the farm economy. There is no doubt that we have to see improvement in the economy of the farmers, upgrading themselves from the regular dependent on hand-to-mouth basis on getting the money. So there are two important factors. One is, when the government initially thought of doubling the farmers' income in 3 years by 2022, the important factor of reform was the requirement. Second, dependency on only crops rather than upgrading themselves towards an investment in agriculture is another important factor. All these things could happen only when there are reforms in agriculture as well. So I am of the clear opinion that this is a wonderful step taken by the government to take it forward, to create an environment where the farmers will have an opportunity in a longer run to upgrade their economic status and get good value for the crops they grow in terms of the output.
Amit, I want to go back to that survey question which I asked Sanjeev Sanyal on this entire dependence on imports which needs to be reduced. How realistic is this? Because one side is attempt. I mean, we all want India's GDP to grow in double digit, but it will not happen. It's like saying that I want to import less from China, but if India cannot produce, if we don't have competitive advantage, if we don't have the skill and the size, why should we pay extra? Why would corporates do something where they know that ultimately market is not there?
So, this is an exceedingly important question, and it brings the whole competitiveness debate into the focus. So if you really look at it, like the reorientation across the global value chain, that is definitively going to happen. And it is going to happen because fundamentally enterprises will want to reduce their risks. Because what has really come through to the fore is that because of the pandemic, the enterprises know that you cannot really allocate all your resources or all your eggs in one basket. And that is what they've seen in China. There is going to be a fundamental shift or movement of global value chains over the next few years, and probably it will continue for the next decade or so, because it's not going to happen immediately. It's going to happen over a period of time. The larger question is going to be that how India can actually attract these sets of investments. For this, I think, one, we need to really carefully understand as to what are the sectors we should actually focus on. Sanjeev did allude to a very important point. And that is what he was saying, the clusters that they're really looking at. So there are those 8 or 9 clusters that the government of India has actually identified. So try to create productivity situation there, try to create a supporting ecosystem wherein we are able to go forward. I think this also leads us to an important question in terms of understanding as to what we should focus on. In fact, if you really say that I want to do everything under the sun, in fact, the biggest pain point from my point of view from an economic thinking is that every state wants to do everything under the sun. It is never going to happen. You have to understand there are 3 or 4 sectors where you can actually do something very positive, and that is what you should focus on. And that is what they'll have to do, and then start moving in towards a situation where you become part of the global value chain. In fact, the other question that is important is that what is it that we want to do as part of the global value chain? Is it going to be lower end of the food chain, or we are actually going to move at the higher end of the food chain? I think this is the right opportunity. If we get the ecosystem right, if we get the policy right, if we get everything right in terms of like what we want to do, this is a situation, or this is an opportunity to really move up the scale. This can actually lead to huge productivity benefits. But I think we will have to really recast a lot of our regulatory systems. In fact, there are those skirmishes like in terms of saying that a lot of enterprises are not coming to India, or they're moving out or whatever. There seem to be some challenges. We need to move over those challenges and create an environment where those investments continue to happen. From my point of view, I'm supremely positive in terms of like how things are really going to pan out, because if there is an opportunity to really rev up the world, if there is going to be an opportunity for an economy to stand up in terms of saying that this is going to be the next big economy after China, then it has to be India. There is no other place which is actually pegged at that level. So that's where it is.
Sanjeev, the big question is that government GST collections are down. We all know why. And one side you got the fiscal constraints. In case if one has to really look at some outsize out-of-box thinking. What can be done in a calibrated manner which ensures that the economy is stimulated, the losses are contained, and the fiscal maths and other compulsions are also not compromised?
Obviously, when we have a slowdown of this kind, we are going to see a decline in revenue. There's no question about it. When we went into a lockdown, we were aware that you're going to see GST collections fall for the simplest reason. We have literally locked down large parts of the economy. So in that sense, this is not a surprise. But we have to accommodate that because you have to allow for spending to keep demand at, and revive demand. So we recognize that there will be a necessity for allowing the fiscal deficit to widen. And that will happen naturally anyway, because as you mentioned, of the revenue slowdown. But, there are other ways of ramping up spending. The government, and not just the central government, but the state governments as well, can take on more debt. We are willing to borrow for, particularly to create new infrastructure and assets. And where necessary, we are even willing to do carefully calibrated monetization. So I think overall, the resources will not be the major reason why we are not, spending.
As we come to the end of the India Revival Mission blueprint that we've been discussing over the last 1 hour or so, I just want to get a sense from across the panel at this point. And yes, Sanjeev Sanyal, you're excluded because I know the government doesn't get into projecting GDP numbers, but I need to get a sense from the others on the panel on what they think India is going to end at, given the green shoots we are looking at, given some of the optimism that we carry about the growth coming back, consumption coming back, investment coming back. But let me first start with Mr. Vipin Anand. Mr. Vipin Anand, what do you think in March will be the GDP numbers given the situation that we are in today?
Navika, I think the GDP numbers depend entirely on what we do right now. I think all the ingredients are there.
Mr. Vipin Anand, no long explanations. I just want a number. And Mr. Dinesh Khara, what's your number?
Well, I think the way situations are evolving, we'll have to wait and watch, but it will be certainly better than what we have seen in the last quarter.
That's not a number, sir.
No, well, of course.
Stick your neck out. That's what we do.
No, we'll have to wait and watch. I think its situation is actually evolving. So ascribing any number may be very difficult at this point of time for March end. But it will be certainly better than what we are today.
All right. Mr. Mallikarjun Rao, what's your number?
Very tough to guess, but then I venture to guess, to be positive, anything around 2 to 3%.
Okay, that's a brave and an extremely optimistic lookout. Amit Kapoor, what's the number that you can look out after this detailed survey and responses coming in from your respondents?
So I think I would really see an overall contraction of close to about minus -5 to -7% year on year. So that's what we are expecting. But I think if we are able to do that, that's a fairly positive thing, looking at what we have actually gone through.
All right. And Nikunj, you want to take one guess? Are you going to stick your neck out and eat Inau's neck out?
I wish when you have more qualified people than me who can speak and understand the economy, well, I would say that let them do the talking. We will ask them if the numbers are not matched next time that why the numbers did not match.
That's right. Always we keep the right to question you once again. So at this point, what I'd like to tell our panelists is that it's been a super discussion. It's been a good insight into what we are looking at, the challenges that are before us, but also some of the optimism that's beginning to peep out. Let's hold on to that optimism. Let's work towards a plan. Let's work on the blueprint that we've just discussed and look forward to numbers that will take this country forward. Thank you very much to my esteemed panelists and of course my very fantastic friend and lovely co-host Nikunj Dalmia. Thank you very much all of you for joining us here on the India Revival Mission. We'll see you again on the other side.